Hello, hello, Rain Man Red Doug. It's a nice. I don't think you've ever been first, my friend. That's it's an accomplishment. You're now on the radar. Hey guys, yeah, sorry about the late start. I was streaming to the wrong account, my personal account. So don't get any ideas. Bjorn is late. Yeah, I think we confused him a little bit. So sorry about that, Bjorn. Nice, 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 nice. Can I say anything about the guy that wanted to simple buy 11K XCM but received 8K early? I can't say anything about it because I haven't even heard of the case yet. So, but I could think of a couple reasons why that could potentially happen. But I have really no insight on the issue. So maybe somebody will send me a Slack message about it, and then I can comment. Hint, hint, wink, wink. Hint, hint, wink, wink. Wink, wink, hint, hint. Yeah. Oh, is that the wrong one too? Jesus, look at me. I'm on fire today, guys. I haven't eaten, like literally I ate, I think, a granola bar and some gluten-free toast with vegan butter. And yes, I did say gluten-free toast with vegan butter. That's like, I don't know, a plate full of chemicals, but no animals were harmed. So you can feel good about yourself when you eat it. So yeah, my brain's working a little slower than usual, I guess. But anyway, you got here. So somebody fixed it. That's teamwork. See, no I in team, fortunately. Yeah, I need my strength. Well, actually, a good CEO's actual role is just to make sure he hires people that do things better than he does. So you kind of need your strength for doing that. If you really hire the right people, you can kind of just sit back and watch the thing kind of run itself. But yeah. Anyway, everybody needs their strength. I just haven't had time. I've been calls all day long. Plus, my stove broke, and the technician didn't show up to fix the stove. Which is like ridiculous. If I was a stove technician, I would have been there fixing the stove. I mean, it's my job, right? What's the real target market for the CSD? Okay, I'll answer this one real quick. CSD and the Japan Ski Lodge. How would you go on to market this to the average Joe? Well, the average Joe probably doesn't fly to northern Japan to ski down, the best powder in the world. So I guess it depends, right? That doesn't mean the average Joe is kind of out of the equation. I would say that the unique thing about this is that you have several different segments, right? You have people that like to ski. You have high net worth individuals that just like to make a daily interest on an investment. You have real estate investors that like the fixed interest rate of the bond, and then they can convert into a retail investment that potentially can earn quite good revenue. You have people that maybe would think about getting into a timeshare in northern Japan because they like to hike in the summer or they want to ski in the winter, and this allows them to get interest for the first year to 2 years, some fixed interest, and then get those use tokens. And not only that they get maybe a week, maybe 10 days, maybe 3 days, whatever they get at the property for free with those use tokens every year, but they also gain access to the revenue that's tied to the growth token. So I think there's a few segments, and I guess the main segments, obviously people that like to ski is up there. Your regular Joe investor is also there, but maybe they found something that pays more than 5% interest fixed. Probably not though in the current market. I mean, I guess if you believe that the stock market bubble is never going to burst, and that the governments around the world are just going to continue to throw money into the stock market because no one else is, and all the 12-year-olds on Robinhood will continue to throw a bunch of money at the stock market as well. You may put some money in stocks. I think most people are trying to diversify. So I think it's a pretty good climate for alternative investments on the whole. Yeah, it's electric stove, dude. It's like conduction. What do you call it? Induction. Well, there must be some conduction in there too. I guess it has to conduct some. Anyway, it's an induction stove, so it's electric, glass top like induction stove, and it just doesn't work, man. I can't make food, which is a problem. When you can't eat, you do dumb things like stream on the wrong channel. At least I've heard. I heard somebody saying that at one point. Okay, so let's get into the show, guys, and then I'm going to jump back, and I'll obviously we'll get to the AMA portion of the show, and I'll start answering some questions right over yonder. Before I do that, just remember, guys, I see 30 people in the room. Cool. Hit the thumb button on the top of your screen or bottom screen. I don't even know what the UI UX on YouTube looks like when you're watching a video. That's terrible, right? I don't watch YouTube all that often, but you guys should, because I'm here. So yeah, please thumbs up. Let's move on. Let's get into the show. I'll come back, answer questions, and we'll have a bit of fun, hopefully, in the process. Or maybe I will. Hopefully you do too. Maybe you'll learn something. That would be kind of cool. Okay, so if you haven't been here before, my name is Kevin. I'm the CEO here at CoinMetro. And every week we do this little show that we like to call This Week in Crypto. It's got 4 pieces to it. I would say 3 pieces really, but anyway, my agenda says 4, so I read 4. Number 1 on that is market news. I go over 10 pieces of market news that were curated by our elite Telegram group. Thank you guys and gals for that. I give a comment on each one. Usually it's about a minute. If it mentions something that triggers me, and everybody that's ever seen the show before knows that usually means Binance. Sometimes regulatory stuff, or actually it triggers or interests me really. I may go off tangent a bit. It might take more than a minute. Generally in 10 to 50 minutes, we knock that out. Then we move on to Kevin Explains Crypto. I get a term or a phrase that's usually related to crypto, sometimes not at all, sometimes kind of. Anyway, it's a word or a phrase tied to financial markets somehow. And I define what it means, or I try to. I think I've done pretty well so far. There might have been once or twice where I rambled on for too long. I don't know. We'll see what happens today. And then number 3 on that list is live Q&A. So right here on YouTube, throw in your questions. You can throw them in now, sit back, enjoy the show, and then I'll answer it at some point, or you can just wait, throw it in later, or you can, leave, get a cup of coffee and come back. Up to you. Then we have Reddit questions. Reddit questions this week. Let's see. We got a few on the radar here. So I'll probably answer those Reddit questions before we go into the live Q&A. Maybe I won't. It's Friday and I haven't eaten, so I have no idea what's going to happen. So let's see. I might just pass out. If I pass out, hopefully someone will come in and wake me up. So here we go. Number 1 on a list of 10 news this week. As extreme inflation looms, Ripple CEO Brad Garlinghouse says crypto could help stabilize markets. No, it can't. That's a pretty easy answer. I would just move on, but let me explain that. I wish Brad was here so he could explain to me in all his infinite pre-mined wisdom how crypto would stabilize the traditional market. Would people be selling all their crypto to buy into a market as it tanks? Or would they make so much money on an overly inflated traditional market pumped up by government money and then use that money to buy crypto? I don't know, but either of those doesn't help stabilize the market. And obviously we're talking about inflation here. I think there's a misconception, and obviously Brad is probably referring more so to the US dollar. Everybody likes, I've heard the word hyperinflation now more than I've ever would have liked to have heard it in my entire life. Hyperinflation in the USD, not really possible. And I could have a long macroeconomic chat about that. We could do a whole AMA about that specific question. It's not really possible. The U.S., right? Your taxes in the U.S. go 8% of taxes go to pay the U.S. debt. Right now, that 8% still outweighs the debt, right? They still have a ways to go before that 8% gets hit, but they have access to 92% more of those taxes. And most of that, a good portion, even if it was only 4% more, even if it was 8% more, Jesus, they'd be able to keep on printing for quite some time. And even if that wasn't the case, it's a I hate to say it, but it's kind of like it's a fake system. It's an infinitely fake system backed by infinitely fake money that has power around the world because all central banks print and have infinitely fake money. And countries that are tied, either pegged to the US dollar or tied to us in some other way, whether that be through they're a commodity currency, whether that be through export currency, import currency, whatever their economy's tied to, they have great interest to make sure that fictional economy continues. So long story short, I think Brad is wrong here. Number 2 on a list of 10 analysts. Bitcoin fell because everyone is going back to cash. Wow. Where do I send the applause to the analyst that figured out that Bitcoin fell because people sold it? Holy Christ. I mean, Jesus, the brain power of this individual must be so massive that we just can't comprehend it with our small primate-sized brains. So yeah, obviously. Look, in times of crisis, you know what people do? They go to cash. Why? Because they understand it. Even guys that would, sell their grandmother's soul for some Bitcoin in times of crisis will be going to cash. Why? Because in times of crisis, what do you usually need? You need to buy toilet paper, obviously. I mean, the world has shown that. That's what we do. We buy toilet paper. Can you buy toilet paper with Bitcoin easily? Not really. You need cash for that. So you go to cash. It's almost, this is a meme headline, really. Analyst, Bitcoin fell because everyone went back to cash. That's a good one. That's a good one. I'm gonna sit on that one for 10 seconds because that's how good it is. Okay, let's move on. Number 3 on the list of 10, Wisdom Tree proposes ETF with 5% Bitcoin exposure despite SEC's longstanding blockade. I guess Wisdom Tree thinks, well, if it's only 5%, they won't care. Look, the one thing that Wisdom Tree might have going for it is that one of the reasons why the other ETFs simply weren't approved is because there was no real price discovery in this industry. There's no reliable price discovery. Why do I say that? I don't want to say highly regulated because that can be misconstrued. There's no regulated broker dealer that has been trading Bitcoin with some type of price discovery, legitimate price discovery, since its inception. Thus, you have all OTC dealers, most of which are not regulated, pushing prices out that no auditor would probably touch in terms of trying to figure out where the price discovery was, at what time, what the real price was, how much liquidity was really available, et cetera. So the fact that Bakkt now has a bit more history, and Bakkt can probably be considered one of the only true price discovery mechanisms in the market, these guys might have a bit more of a shot. My thinking though is it probably still gets denied because the other side of that was simply, aside from price discovery, if I recall correctly, the SEC was really fixated on kind of investor protection and all these things, and investor protection and kind of making sure that, you know, security and make sure all that stuff doesn't come with regulation, but generally regulation forces it, well, should force it to happen. And thus, without the regulation, the regulator is usually pretty hesitant to create more and more synthetic or more and more additional ways for lots of money to flow into an asset class if they can't if they can't fulfill their duty, which is supposedly to protect the end client. So number 4 on the list of 10, Coinbase users remove 200 million worth of Bitcoins over privacy concerns. Yeah. I should read this one, but I'm trying to remember the Coinbase, the private, I know what it is. It's because the Coinbase bought out this company and they made it public that they potentially want to sell this kind of blockchain monitoring solution to the DEA and other places of the government. I don't know, maybe FBI, I don't remember. Makes perfect sense to me. And I'm not saying that I agree with it, like I don't like my own privacy. But if you're transacting on a public blockchain, well, it's a public blockchain. So whether they made that move or not, authorities could find out who you were already. So you leaving Coinbase doesn't really change that. But, you know, go ahead and leave Coinbase. Come to us. We have way better pricing, way better platforms, lots more features. You know, so go ahead and try us out and compare us. Almost on every level, you'll be happy you left Coinbase. But it just goes to show you how finicky the retail clients are. Retail clients will move because, you know, their next door neighbor who's a car mechanic told them that the guy who sells strawberries down the road isn't the best. It's the other guy. They'll buy strawberries from the next guy because somebody told them. Does the mechanic really know about strawberries? Maybe not, but they're going to do it anyway. So, you know, it just shows how finicky retail markets are and how, you know, as a retail business, you need to protect those clients. You need to provide them, you know, you don't want to be doing things that your clients may not like. But on that, I would say that Coinbase needs to diversify the revenue streams, and they're not going to stop from doing that. And most of that's going to be tied around data that they have a ton of, as well as more institutional kind of services like this. Number 5 on the list of 10, Binance is the leading miner of Bitcoin SV despite delisting in 2019. Yeah, that's a bit of a weird story, I guess. I guess you can speculate why you think that is. Most people pulled out of Bitcoin SV, so there's probably not many mining it. Binance has a lot of you know, horsepower that they can mine with. Why not mine the thing that no one else is mining so you can reap the bigger rewards as long as you know, the asset continues to have a value. So it does show that Binance kind of does whatever they want, and what they say to the public is usually not really what they think. They just say what the public wants to hear, which I'm not saying is only Binance, right? Lots of companies do that. Lots of companies toe the line. Something happens. I'm not going to mention any names of crises that may be happening around the world, but I'm sure anybody who has a television or has a cell phone or an internet connection probably knows what I'm referring to. And, you know, it's one thing to be genuine. The other thing is to just pander to your client base and say whatever you think you should say so that, you know, they'll stick with you, even though inside the company, in the boardroom, whatever, you really don't believe what you're saying, or you simply don't care. So yeah, I would say this is a case of Binance saying one thing and doing something else for their own benefit, which is, you know, kind of Binance's slogan. It's just in black letters on their black website, so you can't see it. Number 6 on the list of 10, Thailand to raise 6.4 million with sale of blockchain-based bonds. Well, yeah, this isn't the first time a bond issuance has happened. There's been several. There's been a lot, more than a handful now of bond issuances. I think the biggest one I saw was maybe, what was it, 50 million? I think it might have been Santander, an Australian bank or something like that. It might have been, actually might have been an Asian bank, but that was sometime even last year. So there's definitely already been bond issuances. Again, nobody's done end-to-end yet, true end-to-end, from creation to issuance to primary to distribution to secondary and to settlement cross-border real time. So when it comes to that Ignium CSD setup along with CoinMetro in Montenegro, we're still going to see, I think we're still going to see some sparks fly, considering the fact that we're actually solving some problems. We're not just looking for PR that we did something on blockchain. Number 7 on a list of 10, Binance to launch a UK trading platform for institutional and retail clients. So I was actually on the call. Well, I wasn't on the call. I was on the AMA, I guess. Actually, I can't say that. I wasn't on it. The guy next to me was on the AMA, so I got to hear some of it. The guy next to me has a friend who works in, well, Binance UK. So he had to watch it, and I was kind of sitting right there. So look, funny enough, most of the stuff they talked about that was so innovative and awesome that they were going to do, we already have. So there's that. Second, I would, you know, I also subsequently talked to someone else, 2 other people that own fiat on-ramps in the UK that were kind of worried about Binance. My response to that was, don't be worried about Binance, because at the end of the day, if you look at all their, I can't say their regulated platforms. What I should say is, if you look at the regulated platforms that use their name, none of them do all that much volume. And what that tells me about the Binance parent is that most traders on Binance, well, 3 things. Most traders on Binance want to be anonymous as they can be. So they're not going to go through any type of KYC or anything, which these these regulated partners have to actually, you know, push their clients to go through. 2, that there's evidently, meaning that they don't allow wash trading, or they monitor it on those regulated exchanges. They don't at Binance.com. There's a lot of it. And 3, that leads to the final conclusion, which is kind of the same, that volume isn't really real volume. Which means that, I guess, number 5 on that is that Binance does a lot of internal warehousing or market making of their own traders. So take that for whatever you want. You know, take that with a grain of salt. Yeah, I don't think I don't think the crypto community should be quaking in their boots for Binance UK. That's my point. Number 8 on the list of 10, popular, what it does, actually, before I go there, what it does say is that the UK is a big market and a good market. And if you have a crypto business, you should be in the UK. That's the one thing, I guess, proven by the Binance move. It's the first market they've moved into, aside from the US, second market they've moved into, I guess, that's actually, you would assume would be because of the size of the market. Obviously, they didn't go to Liechtenstein for the size of the market. Number 7 on the list, and number 8 on the list of 10, popular crypto debit card issuer Wirecard. They're not a crypto debit card issuer, by the way, is unable to locate $2 billion worth of cash. Yeah, this is a surprising one. So, 1, Wirecard does not issue crypto debit cards. No such thing as a crypto debit card, except for maybe those guys. I'm not going to remember the name right now. Somebody out there probably knows who they are, where they actually created a network that you actually spend in crypto. Pundi, I think it's called. Something like that. That's a crypto debit. Well, I would call that a crypto payment card, because debit card has probably already been classified as one that works with cash and makes debits. Here it's more prepaid because you have to have the crypto on the card. So it's not even a debit card. It's more of a prepaid card, crypto prepaid card. Here, this is a debit card issuer, period. But they have their issuing, they have acquiring, meaning they process credit card transactions for merchants. They also have a bank. And I want to wait till I see more information on this. I've talked to Wirecard on a few occasions. They are not the party that will be doing our card program. Though we did talk to them. They were one of the many companies we talked to. They are one of the biggest acquirers. Again, that's someone who processes merchants transactions in the EU. And they're competing with banking as a service solutions with people like Qantas, with people like Solaris Bank, for example. So this could potentially be a huge blow to them. But I'm wondering if it's less of a blow and more of a, we tried to hide moving money from one entity to another as a loan and then simply couldn't back it up to the auditor, which wouldn't necessarily be a great thing, but it also wouldn't be $2 billion worth of missing assets. So I'd like to see how this pans out. But it's definitely not news I would want to hear if I was a current Wirecard customer. That's for sure. Number 9 on the list of 10, 59% of Bitcoin and crypto investors get their news via Telegram. That's kind of scary. Almost 60%, almost 6 out of 10 individuals using Bitcoin get their news through a medium that is basically full of memes. So yeah, I mean, look, you could say obviously that CoinMetro clients, a lot of them get their news through Telegram, our news, internal news, right? Not like news as in something's happening in the world, but more like this is happening at CoinMetro, or this is what we think about something that's happening in the world, right? Opinion and internal news. Now, I don't know if this literally means, if it means they get their crypto news, well, that's because people post Twitter links, they post links to Cointelegraph, and it all ends up in Telegram. So in that case, I would say that probably makes sense, to be quite honest. Moving on, number 10 on the list of 10, TokenSoft teams with Signature Bank to tokenize real estate. So yeah, I think teams here, I think they're probably going to be using Signet. Signature Bank has a, and we have accounts at Signature Bank, by the way, full disclosure. Signature Bank has something called Signet, which is basically an on-chain way of moving fiat, tokenized fiat, back and forth between accounts. Lots of OTC desks are on there. Lots of broker dealers are on there. Lots of crypto firms are on there. They're probably looking to use that system in order to have faster settlements. I don't believe Signature Bank is actually, in this industry, everybody loves to say partner. It's like if I came on here today and said, guys, I have amazing news for you. Since the beginning, and we couldn't tell you before, but CoinMetro partnered with Google. And then underneath in really small letters, I say, yeah, our email's on Google server and we use Google Calendar. But yeah, we're partnered with them. And that's what happened all throughout the ICO days, 2017, 2018. Everybody was partnering and not really partnering. So I don't know if this is a true partnership. I would say, though, that Signature Bank is obviously open to these things. And I'm assuming if there is any type of partnership, it is due to the fact of quicker settlement via Signet, their own blockchain for tokenized fiat, between TokenSoft, OTC providers, and other platforms that may be working with TokenSoft. So it's basically what Ignium and CoinMetro are about to do in real life, plus some other stuff in about 30 days. So, welcome to the ballgame, guys. Okay, so moving on. Let's do a quick Kevin Explains Crypto, and then we'll jump on to Reddit questions. Yeah, Bjorn, nothing wrong with memes. But if you're getting your news from memes, I don't really know what that means. So moving on, Kevin Explains Crypto. So this week's Kevin Explains Crypto term, or actually, this is a thing, I guess, not really a term, is stochastic oscillator. So it's an indicator, right? So I guess this isn't necessarily a crypto term, but hey, people do use it for crypto trading. So an oscillator oscillates, right? Oscillating means it moves up and down. Most of the time, oscillators, when you talk about indicators, are there to show overbought and oversold conditions, okay? Which means that the indicator is basically trying to take, and this is what stochastics does, basically is trying to take the close of the last candle or bar that you're looking at and comparing it with the close of the last X amount of bars. So usually you can customize indicators, right? So you can have 10 bars, 50 bars, 25 bars, 60 bars, 120 bars, whatever you want to do. And it makes that comparison, and then it takes that price data, and instead of showing it as a messy chart, it shows it as one oscillating line. And when the oscillating line gets to the bottom, that means comparatively speaking to the rest of those candles or bars that have closed, the price is low. They're telling you that it's probably oversold. It needs to go back up because comparatively speaking to the last X amount of candles, it's low, and the same thing for it being high. So that's basically stochastics, and that's what a stochastic oscillator is. Now, that'll be it for Kevin Explains Crypto, but just to put a head on this, I always like to say this. If you're a trader, the best traders in the world don't rely on indicators to make trade decisions. Why? Because indicators lag price. Price is your best indicator. If you have to watch an indicator, by the time that baby show's oversold, I don't care how much you fine-tuned it, you've missed the majority of that move for the most part on most trades. So moving on. Let's get this Reddit question done, and then we'll jump into live Q&A. What do you think? Okay. All right. So we get something from a guy named, or a girl, who knows, named International Mix. Hi, Kevin. Trust all is well. All is well. Thank you. Quick devil's advocate question for upcoming CSD intangible project. Okay, here we go. Devil's advocate. I assume you can purchase bonds directly from the issuer custodian, Ignium. Well, Ignium wouldn't be the issuer in this case. They would be the custodian, though. The issuer would be tangible. So why would people sign up for CoinMetro? Are there going to be any benefits to purchase bonds through CoinMetro? Wouldn't it make more sense to have the sale available exclusively on CoinMetro, so people have to create accounts with CoinMetro and might get involved in other products, i.e. exchange? All the best. So I'm involved, obviously, in both companies. Well, all three in this instance. So I am partial owner of Tangible with Evan, our fine Cathay Pacific pilot, who's been on quarantine. Well, actually, he's out of quarantine. He's in quarantine for 14 days. He went a little nuts. And now he's back to his own, like, normal nutty self, not quite normal, but, almost there. And if you're listening, hi, Evan, all the best. So anyway, so I have, and obviously I own part of Ignium and I own part of CoinMetro. So I have the unique ability to be able to comment on all three, but I also have the unique position where I have to try and do what's best for all three companies. If this was me just owning CoinMetro, somebody coming from Ignium and saying, hey, buddy, this is what we want to do, I'd want to retain everything on CoinMetro's side. So it just makes sense. But what you need to understand is that regardless whether, so you're correct, potentially someone could show up at Ignium's website, open an account, and buy into the primary sale through Ignium. 100% that can happen. But when they want to go on the secondary market, Ignium doesn't provide secondary market. They'd have to go to CoinMetro as, at least initially, the only connected secondary market provider. Having said that, Ignium is not that it's not geared towards investors, but its UI UX is rather, at least initially, geared more like B2B. And why? Well, because most investors end up sitting at secondary platforms, secondary market platforms, primary market platforms. So the idea of Ignium is to connect everyone. So here, people will more than likely, at least from the Tangible side, Tangible will be using their marketing to push people from Tangible's website into CoinMetro and Telegram, and have them open accounts through CoinMetro to be ready for the primary offering. They won't be pushing them to Ignium. And that's mainly because the two owners of Tangible are owners in CoinMetro. So again, it just aligns, right? It just makes sense from a business standpoint. Future offerings, CoinMetro Bond will only be available through CoinMetro. So we will do that for CoinMetro. Future issuances, we will still be tied to we still have we will have a very nice visual marketplace for primaries. So even if they're available at Ignium, they will also be available at CoinMetro. And our goal, our job there as a platform is to just be better than the Ignium platform. More, better support, better this, better that, just like we compete with any other crypto platform, right? Obviously, initially, many of these primary offerings may choose just to go through CoinMetro and not even have the ability through Ignium, though the actual functionality would exist. So yeah, it's a bit different than how you just describe. But yes, the goal, obviously, from a CoinMetro side, is to get people to use other CoinMetro services. That's for sure. All right, moving on. I'm gonna scroll up here, guys, because I think a few things float in. So if you have a question, pop it. Well, you probably don't write it here. Already, I guess you write it somewhere. What, like down there or something? Anyway. So yeah. Anyway, write your question if you haven't already. If I missed your question and you already wrote it, just write it again. Sorry about that. Or copy paste. Just copy paste. What's the real target market for the CSD? Okay, so we talked about that. Everyone liked the video. Yep, please like the video. Like the video. Like the video. Like. Get your grandmother to like it, your aunt, your uncle, subscribe, all that good stuff. You guys know the drill. Oliver needs to get something to monitor Kevin's caloric intake, selling 100K. Well, my caloric intake is probably still all right. I don't really feel all that bad, to be honest, but Most days, I'm on point. But yeah, I'm still broke, dude. Some of these things you can't calculate into the equation. It's so electric or gas. Yep. Hey, looks great on the tram. Copy trading portfolio sizes. Are there more traders onboarded within the near future, and their external cash onboarded along too? So I actually had a meeting in CoinMetro today with someone who potentially will be opening a tram. They need some additional assets to be added, so we'll have to get a list from them, which I asked for, and we'll see if we can accommodate. And I do think, look, right now with some of the investors that we got in the last round here, well, that wasn't round, the last fundraise, I guess, wasn't a completed round, but the last mini round, I guess, that we raised, they have a membership of this organization has a membership of users, and they're pretty interested in tram. So I do think that as we bring on new trams, they will spread around some liquidity into those trams, especially once you start to see a little bit of return. And I think now that, once these current trams are getting more and more money, the word will get out. I remember in FXPig when we had our first managed accounts, as soon as one of those babies got close to 1 million, the word went out, and every tram manager was coming, or not tram, every PAM manager was coming over to us and asking how they could open an account. We were getting multiple inquiries. We probably, over the course between private PAM accounts, had close to 1,000 over 10 years. And I don't expect anything different here. So it's one about more money coming in, the trams, not necessarily profitable month to month, but showing stability month to month. And, it'll start to take off. It's a snowball. Snowballs start small, guys. Then out of nowhere, they get quite big. You have lots of Reddit queues today, by the way. I only have one I had the one that I answered in my list. If anybody has a Reddit queue that they think is cool or interesting, you can post it here and I'll answer it. About marketing the CSD, as with every new thing in finance, it will be met with initial suspicion. How can you convince people that it's a legit investment and not a timeshare scam? Well, that's not marketing the CSD per se. That's marketing of Tangible, right? The actual, well, not Tangible. It's marketing of Basecamp, which is a project brought by a company named Tangible. So yeah, look, it's everything that you're going to try to market, no matter what it is. There's going to be a group that doesn't like it, says it's this, compares it to something else, says it's a knockoff, says it's this, says it's not good, says you're going to lose money. That's the nature of the internet. So how do you do it? Well, I think one, having ties to people that are tied to other known companies. And when I say known, I don't mean, obviously CoinMetro isn't known all across the world yet. But it's been online for years. FXPig has been online for years. There's a verifiable kind of track record of the people behind it, the people that work there, and you can find them online and they're searchable. And those things help for sure. And then tying to say, look, this is the land is owned, the plans are paid for, we have exact cost structures. So I think there's a lot there that needs to be that not taken for granted. Having said that, it's marketing's job. It's marketing's job to make sure that the copy, that the site and everything. Now, in terms of, this is a landing page to begin with that will be up for Tangible. So it's not going to be, some crazy, awesome, website yet. It's going to be a landing page. But having said that, sometimes the best converting landing pages aren't all that great looking. So we're looking for conversion here, and it's a landing page. It's a lead generator. It's to push people into Telegram, to push them to leave their email so they get more information. And so just, keep that in mind. And, you can't please everybody, I guess would be the last thing I said. It's about, it's a numbers game. We need to get a certain amount of traffic to that landing page, convert a certain amount of that traffic, and get a certain average contribution or a certain investment size. Now we can actually say investment to make it work. And, that's the goal. And I think we're well suited to get it done. Good day, fella. Hey, Bob. It's midsummer. Yeah. They call it, well, it's obviously it has different names and I guess, around. I mean, midsummer is definitely not celebrated everywhere. That's for sure. We didn't celebrate that growing up in the U.S. Didn't celebrate it in Mexico either. I don't think in most European countries it's not celebrated. But in the Baltics and where they actually have, really long days, Russia, etc., it is celebrated. Nordics. And here they call it Yanipov, I think. I'm probably pronouncing it, probably butchering it. But essentially, but yeah, midsummer. Yeah, you're right. I did not have any strawberry cake. Wait, maybe actually I did. I think I had some vegan strawberry cake yesterday, actually. Jan's asking CSD, I guess. CSD will be a significant news that potentially could attract a lot of new customers. Back in December 2016, lots of people joined exchanges because of minor news on a coin. Yeah. I mean, it's one thing, once you have a bunch of people joining, once you have a steamroller of people joining things, it kind of it takes on a life of its own. So right now, what we have going for us is, stock markets around the world, we're hitting all-time highs because of government money. Eventually, that government money stops. When that happens, markets capitulate. They capitulate hard. People are now looking at alternatives. People aren't trusting the government again. People aren't, this whole cycle that we see over and over again through every 5, 10, 15, 20 years is starting to happen again. So people are looking for those alternatives. So some news about an alternative that they can get, kind of on the ground floor rather than like pre-IPO versus, after the IPO, after the underwriting, and then they get in and they already lost, 70% of the move, will be exciting to some. And, to your average Joe, just knowing that he can take, 10 euros on his credit card or whatever that he might just have sitting, maybe in his CoinMetro account, who knows, and put it into something that yields interest, much more interest that he gets from the bank, and gives it to him daily, and he can just sell out if he wants. So I do think, the first issuances, obviously we're gonna have to do our best to make sure that there's eyes on the prize on those first issuances. But the steamroller will start, and as a product, this whole sandbox kind of product, as a product, I think it will do exceptionally well, and that will obviously bring new eyes and new users to CoinMetro as well, 100%. Will CM leverage on that and have the news out on a broader scale than sending it to only who knows? Yeah. CoinMetro. So Ignium will be doing PR that will include CoinMetro as well as Tangible for the first issuance. Montenegro government at some point will be doing some as well once they get some budget back after the Corona lockdowns. And CoinMetro will as well. Obviously, I think Ignium might spend more than everyone else in this equation. But there will be PR. We'll be looking to get mainstream PR, your Forbes, your Newsweek, your Bloomberg, et cetera, on the back of what we believe is something that's groundbreaking. And I think we have a chance to do so, considering how a lot of these stories are picked up by mainstream media. And we're going to have quite the big story to tell. I have gained 20 kilos of muscle by carrying my XM bags, and can we get beach resort bond next? Beach resort bond, maybe, Tangible on the success of the ski resort. Tangible's whole thing, well, it's called Tangible, right? It's about tokenizing tangible things. So yeah, why not? We could potentially do that in Mexico. Maybe I have enough contacts down there to find a project probably that would suit quite nice. But yeah, I think Tangible will go off in many different tangents on what type of tangible assets it tokenizes. Usually illiquid tangible assets. When Moon. Yeah, When Moon. So Rajan, soon, buddy, soon. That's When Moon. Journey to the moon takes a while, man. But once you get in the rocket ship, you get there pretty fast. You just got to wait to get in the rocket. Sometimes there's a line, you just got to be patient, man. Trust me. I know what happens is people that were in this bubbles, when your first investing experience or contributing experience, I guess, is inside a bubble, you think that's how the investment world operates. And you always expect things to move that fast. And in the real world, that generally doesn't happen. Even if you take the ICO kind of bubble from or even altcoin bubble from a macro perspective, the percentage that actually did move fast, were remedial. And most of those guys, I hate to say it, but did it through means that probably would have been illegal in mainstream markets. So as this market matures, it's going to reduce a bit that, unfortunately, moon real fast type. Not that things don't happen, even that happens in the traditional markets where things can skyrocket, right? You could have a company named Zoom, and people think you're actually the Zoom, your ticker Zoom, and they think you're Zoom, the conference software, and you go up by 1,000% in a couple of days. So those things happen again. Usually, not for the right reasons. So anyway, my point is really just to say that my goal is way past the moon. I mean, I don't even know why that's a goal, right? The moon is pretty close. I want to go places that no one's ever been. So I know, we know that outside of our galaxy, there's other galaxies, and we know, Pluto used to be a planet, not anymore. Now it's a dwarf planet, whatever that means. Can you imagine if you said like dwarf planet, right? Isn't that like if planets were living beings, right? First he's a planet, then you call him a dwarf planet. Like somehow that's not an actual planet. Like dwarf planet lives matter. There'd be a fucking uproar. Anyway, I don't want to get too like political on this thing. We'll probably have some issues with YouTube. Sorry, YouTube. So yeah, thoughts on the DeFi craze? I wouldn't call it a craze yet. I think decentralized finance is super immature at this point, and I think I mentioned this on the last show that paying high interest because you're able to loan out collateralized loans at relatively high interest or margin loans to traders at very high interest eventually is going to end. Or you will get so much interest from the people putting the money up to loan that interest is going to far outweigh the amount of people that are actually taking the loan, and thus you can't pay the same interest rate across the board. So enter in fractional reserve, where this is how banks, loan. They have 1% of the money on tap, and they loan 100 times more out to the public. In the U.S., they don't even have to have 1% anymore. They can just loan out wherever they want, unlimited. And that's why that was the kind of good reason why fractional reserve came about. Obviously now we know that it's been used for bad reasons, like most things in the world. But yeah, I wouldn't call it a craze yet. I think DeFi does have some legs and it will grow, but just imagine everything we already have just built in a slightly different manner. So peer-to-peer loans, centralized loans, credit cards, consumer loans, the ability to swap credit, kind of like credit default swaps, but maybe even be able to do that on a personal level where, you can actually buy and sell personal defaults to make some money. And it's kind of like, it's just, to me, what DeFi is, besides just the decentralized aspect to it, which to be honest, most people won't give a shit about the term decentralized, but allowing people to get into products that they never had access to before because they were only for sophisticated investors, on a Bloomberg terminal, for example, is really what will give DeFi its legs. All these super overly complex products that they're trying to build on the top of a not so mature underlying market are going to explode in lots of people's faces over the next coming years. But I think it will lead to a movement with legs, and eventually you'll see traditional products being offered in like the DeFi space, and bringing on more retail into those. But things like what happened with Robinhood with this kid who thought he lost $730,000 and then killing himself, right? I don't know if people saw that news. That's not good for that's not good in general, obviously, but for our industry, the fact that we have to fight. Look, this is why I don't like synthetics in a immature market. Because you get a lot of retail guys that get burned really hard on synthetics. No matter how much warnings you put up, whatever, the regulator is going to end up coming back to blame the company. And that's going to lead to stricter regulation. That's going to lead to Robinhood not being able to offer options to retail guys. The whole reason for Robinhood was to be able to do that. And now maybe they're going to maybe it's not going to happen overnight. But regulators aren't going to sit down and play four-dimensional chess to figure out, oh, well, really, it's not Robinhood's trying to do a good thing here. They're just going to look at the news, the constituents that emailed them about it and phone them about it, and then this company. And the company, more than likely, unless they have an extreme lobbying effort, might lose. And if that precedent's set, man, it sets fintech back quite leaps and bounds. We're in this kind of day and age where, look, supposedly, according to the law, you're 18 years old, and you're an adult, you can make decisions as an adult. Which means if you make a decision and you lose, that's on you, and it should be on you. It shouldn't be up to somebody else to tell you that what you're doing is stupid, right? But they make it that way. And things like this happen, and it's unfortunate, right? Nobody wants to see something like this happen, and obviously somebody losing their life, I can't really compare to somebody losing the ability to issue a product to a client. But, I don't like to get down the wishy-washy road of trying to compare this to that, What I would say is that from a business perspective, it sucks. And what it probably will mean is more and more restrictions being applied, not just in traditional markets, but definitely in crypto. No more options, no more futures, no more futures to retail clients. So that's a difficult one to swallow. And I can't necessarily say it's the fault of Robinhood. I hate to say it, but it's the fault of the kid that traded. I mean, and on the back of that, it's the fault of the law that says 18 is old enough to make a decision like the one he made, opening a financial account. Why? Well, you can go to war when you're 18, but you can't drink. But you can open up, you can do something that could potentially make you want to commit suicide because you don't understand what you're doing. So anyway, blame can go all around. But it'll definitely fall on Robinhood, and the regulator, I think, will tell us about that shortly, unfortunately. Nothing is wrong with memes. Agreed. Okay. Question is if Biz gets its news from Telegram or vice versa. Biz, no. I think Biz is a whole world on its own. I think Biz just makes up news, and that maybe makes its way to Telegram. Are you part of the IBA? Didn't know you were a lawyer. No, the International Bar Association. No, is the bag somewhere in the picture here? Anyway, or is it the tag? Something must be in the picture. Anyway, no, I'm not part of the IBA, but I sat at a panel. I did a panel discussion at the last IBA that happened in Seoul, South Korea. I think that was late 2019. So yeah, not a lawyer, but play one quite frequently on panels. Weren't you supposed to implement the Thai's social media indicators this week? Yeah, I have a phone call with them actually at 7 p.m. local time just to have a catch up. So it's in the cards for, I think, next week to be implemented. So hopefully by the end of next week, you're going to see it live, at least the first implementation. How is the outcome of the test marketing? How many active traders? Test marketing is going well. Lots of new tests are now being performed on different landing pages, different ways to push clients toward the main website through different funnels. Don't have numbers for you right now. Tag me on Telegram at Kevin Murcko, and we'll get some of those numbers together and shoot them out to you guys. When will the continuous marketing begin? July. How much bigger in size than test marketing? It's not about the initial size isn't going to be much bigger. It's just the fact that as revenue rolls in, that revenue will be immediately invested back into marketing. So it'll create, again, like a snowball effect. It'll obviously be slightly larger than the test marketing in terms of money spent, but it's not going to be massive. And I've talked about this before. You start with 10K and you get the numbers right. And 10K is just an example, but you start with 10K and let's say, you make 20 euros per month per client and you pay 10 euros to onboard them. That means you onboard 1,000 clients for 10,000 euro. That next month you make 20,000 euro. That month you make 20,000 euros off that client. Those clients on average, you invest 20 the next month. That gets you 2,000 more clients. Now you have 3,000 clients. Those clients make you 30,000 the next month. 30,000. You get the point. Very quickly, you have a pretty big marketing budget, and it's continuous and it's growing. And pretty quickly, we're in self-sustainable range, I guess. How much impact on XCM price do you see with the bonds tangible coming? It's all about the number of clients. As you see, we onboarded 7,000 clients, lots of whom, not lots, many of whom came just for a bonus. But we saw what, 60, 30, well, how much was it overall? I think we went from roughly 2.2, 2.3 up to close to 4 cents, or maybe we even touched 4 cents. 100% increase almost, 80%, something, 85% increase in XCM just because of those clients. So it's all about the number of clients and the usage on the platform. So it's indirect, but it's also direct because tangible will be sold through CoinMetro. CM bond will obviously be sold through CoinMetro. We'll be able to advertise these in different manners than we can advertise other services we do because we'll have the legal ability to do so. So within the EU at least, and certainly other parts of the world as well. So it's how much impact? A lot. I mean, I know that's a vague answer, but a lot of impact because it will mean lots of new users, lots of new people coming on the platform. And even with an indirect effect, it'll be a big one. Did you finish design for this debit card yet? I haven't seen it design. I'll have to ask about that. It was on my list to ask. I do think I think it was on the list of our illustrator for today, actually, but I haven't seen it yet. When will the new website rebranding be complete? Right now, there's going to be like an interim kind of landing page-ish homepage, which I think will be complete probably next week. By the end of next week, that will go live, and it'll be an interim between the current website and a new, much more aesthetically pleasing website using the new branding, which we will do in due time. Once we move forward. But this landing page will be primed for conversion. So it'll be a landing page for our homepage, but primed to convert using the new branding, at least to a certain extent. I think it's bubbling into something similar to the ICO craze. I think it's different in many ways, but the amount of money that may flow in could be substantially bigger than the ICO craze. That's for sure. Is CM prepared for a big influx of new users, ramped up marketing like KYC and under 48 ready? Yes and no. So are we ready yet? We obviously learned some things from the last time. We revamped a few things. We've made some tweaks. We're going to make some additional tweaks to what's accepted, what needs to be given to us, what doesn't. The kind of ratio of first-time passes on our KYC process versus people that have to do it multiple times. Improvements to the bots so that people get answers quicker, so that they don't have to talk to humans, and we don't reduce the amount of time focusing on onboarding those clients, et cetera, et cetera, et cetera. Also bringing in some new people as well. We've already hired, I think, one other new person, and we'll probably hire a few more, at least part-time. So we're gearing up. So, there may come times where there's a bit of a delay. But at the end of the day, every time we run a test, and that's why we want to run multiple tests, we learn a bit more, we streamline a bit more, only to get us to that point, and we hire a bit more. So just to get us to that point so that the threshold from when those delays may kick in goes farther and farther away. It's not so much about, you need 100 people to kick. No, just improving one small thing on UI UX sometimes can reduce that load by 20, 30%. Our bots, for example, refining the bots went from them answering only 2 or 3% of questions that came in to something like actually getting people the final answer they needed on close to 30% on some topics. And that's huge because that reduces load. And that means the same amount of staff can handle much more processing than they could before. Hard cap limit for tangibles, 2.5 million euro. A few days ago, there was a soft cap. Why was that removed? Well, I had a discussion. So 100% transparency on this one, guys. We had a discussion. So my co-founder, Evan, originally wrote out that text. We had a quick discussion about it, but I didn't bring it back up because I was just busy with other things. Tangibles raise, base camps raise, is dead. It's not. You're not giving money that basically is just going to go to building something, and then you're going to get a utility token. It is debt. It means it's an obligation to the company that the company has to pay back. If the company doesn't get enough debt in the first 90-day, let's say, issuance period, let's say it only gets 200K, 500K, you name the number, whatever it is, then we move to clear the land, build the foundation, get some more equity into the land, and we do another raise. Because the bond tokens will exist because they will be, in the balance sheet, right? So it's 2.5 million. That's what we need. And we would simply raise until we got it in different trenches. So the project might take a bit more time to come to fruition, but we would be obligated to pay the interest. And, that's what bonds are there for, to make interest, right? So I didn't see a reason to have a minimum cap. Because again, it's just an obligation, and the people that are buying in initially are buying in for the bond, right? They can always convert once the thing, and if it gets to a point where construction takes an extra year, let's say in one scenario, then they can always sell out of that bond to someone else who wants the interest and get the principal back if they can't, or convert into that growth token. So I think it just doesn't make sense to have a minimum cap in this case. Why hasn't there been any PR for GBP launch? Nothing on the update channel. It's coming. We just, knowing how things happen, we had we're trying to streamline compliance between the banking as a service provider and ourselves. And right now there was a gap. So there were things that were getting held up, faster payments that were getting held up, for example, for a day or a couple hours. And they just had their setting correctly according to our own internal policies, which have already been approved. So it's things like that. We just want to make sure that the experience is, as good as it can be. Then we launch the campaigns. So the campaigns will be coming very shortly. Any news on funding? No specific news on funding. The bond is probably the main thing we're working on in terms of funding. I did have some calls a few weeks back. Those are kind of still ongoing back and forth. No new news as of those calls, but lots of focus has been on building out the infrastructure needed to get tangible, and then obviously the CoinMetro bond up and running. How's the mobile app? Mobile app's going well. Supposed to release this month, probably towards the end of this month, obviously, since we're already halfway through, or a little more than halfway through. But it's going well, and it looks fantastically better than what we have now, fantastically more feature sets than we have now. So far, so good. And I think we're quite proud of the app. Right now I can't say that we're proud of the app, but I wouldn't say that it's it's just something that it was such a moving target for so long until we could really sit down and hash it out. It just was kind of difficult to come out with something that we actually really liked. And I have to say that this new mobile app we really like. So that's an accomplishment. CM still not profitable. When CM bond is issued, if CM is still not profitable, that would mean that you will be taking profits of the contribution from bond offerings to pay the coupon. Well, initially, just like with any company that raises a bond that isn't profitable, which is lots and lots of companies, yes, there is an allocation from that bond to make sure. Look, it's only 2 years. It's a fixed year it's a fixed for CM. It's a fixed product, 2 years. That means if there's going to be a variable interest rate depending on if you're an ICO. So somebody asked here about ICO contributors and if they were going to get a benefit. They are. So if you're an ICO contributor based on certain requirements, we will get 12% interest. If you're a normal guy off the street, you're going to get 8. And then depending on where the tier you are with your XCM, you can get 9, 10, 11, etc. So the maximum is 12, but you can take an average. It's going to be roughly 10%. So that's 20%. That's 500K. That 500K, you're not spending, right? Because it's part of. I mean, you have to have those coupon payments available, right? But that's how bonds work when bonds are raised for operational expenses. I mean, that's just the name of the game. There's usually have some way you might be able to refinance, et cetera, if you get to that point at the end of the bond and you're not able to let's say repay, depending on how you convert those bonds. These bonds will be converted into equity or XCM. So there's no converting back to cash. So yeah, the way the bond is structured, I would say that we're simply putting aside the 2 years worth of interest. The minute that we do go profitable, then we're able to access that cash, as long as we know that we can maintain the bond payments, right? We probably still have a cushion for sure, but it just depends how we go. I would say, without a shadow of a doubt, that getting more money in, I don't want to pinpoint the exact amount of runway we would need, but essentially we are very close to getting the numbers right on the marketing. And then it's all about marketing spend and just building out basically support, compliance, and which is the main supporters of the business when we start to grow. And I generally think with even just €1 million, we get into profitability. If we had €1 million more in our account today, in X amount of time, based on our current runway that would provide us, basically, we would be into profitability. So anyway, but yeah, the coupon payments initially would be divvied from the bond itself, because the bond is for operational. It's part of operational expense. When do you expect CM to be profitable? I guess I just answered that one. But we are, even though number-wise we haven't seen a huge push higher, what we've seen is our ability to find a real and profitable client acquisition cost. And with that, it's just about spending and maintaining that client acquisition cost. So I think basically with the funds raised on the bond, we're on our way to profitability, even if we don't raise the 2.5. CM bonds 2.5. So 2.5 is there for a reason for both projects. One, for tangible, it's actually just slightly above what we need in the most conservative estimate. But in terms of CoinMetro, 2.5 keeps us under the safe harbor rules in Estonia, which means we can raise that amount of money even from retail investors in Europe without needing to file a prospectus with the FSA. And we're currently researching safe harbor rules across the EU to make sure that one document will get us into the entire EU legally, so that we can actually market a security in the EU legally and onboard retail clients. So that's why the 2.5. If you remember, initially CoinMetro was doing a 5 million round. We raised roughly 1.4. So really we have like 3.6 left from that round. But because we made so much progress with that 1.4 we raised, we don't really need more than 2.5. Even with 2.5, we probably have a chance of attaining even that MTF license and still getting into profitability, which is what was one of our main goals with the original 5 million raise. Can US investors get involved in CM bond? Right now, that's one of the things that's being researched. We are trying to make that a possibility. So we're trying to figure out how that could happen. But I can't, no word on that yet. US is tricky. But we're doing our best to see if we can get that to happen. Obviously, in the lead up to the launch of that product, that obviously will be made public. But we're giving it our all to see if there's any way, shape, or form that we can make that happen. 12% coupon rate is pretty high. That would likely attract lots of interest, but it's quite high. I don't know CM well. It would seem a little scammy. Well, I guess if you know bonds well, it wouldn't seem scammy. It's high risk. It's high risk because it's a company that's not yet in profit in the crypto industry. So in terms of risk, it's high. If you're high risk, you can't pay 4% because that's not going to be appetizing to anyone that understands bonds. Even if you go on and you buy, there's a market in Europe. I'm not going to remember the name of the company off the top of my head, but they sell bonds tied to personal loans, peer-to-peer loans. And even a guy with AA credit is going to pay around that amount. And if you have B credit, you're going to pay 18, 19%, right? So for companies, I've seen corporate bonds for this size or more, up to 10 million, that pay similar coupon rates. So I think the coupon rate is more or less where it should be. 12% is a perk that goes because you've been with us since the beginning and you're an ICO contributor. Most people will get 8. That's where most people will lie. If they decide to buy some XCM and I guess you can say stake it or put it up in their rewards wallet, so that they gain some rewards, tier 1, tier 2, tier 3, then they can gain a bit more. I think the average will probably come out below 10. 9 point something, I think, is more or less what the average rate will be paying. And we assume to pay 10. So the 12% is a perk. It's just as a way to reward you guys, the ICO guys that have been here since the beginning. Thanks for your transparency. Have a good weekend. You too, buddy. Do you think the CM bond will compete with XCM as a token for the platform? No, completely different. Plus, once that CM bond meets its maturity in 2 years, they're destroyed, they're burned. And then people are either converting into equity or back into XCM. And the equity would have another token, the growth token. But the growth token isn't utility in nature. It's access rights or underlying rights to dividend, revenue share, things like that. So it's equity-like, and it's not utility at all. So I don't think so. They're two very different aspects. XCM is inherently tied to usage on the platform. Obviously, the equity token would make more money based on more usage of the platform, but it's strictly tied to the money made. Whereas XCM can go higher even if the money isn't made, right? Because if people are only buying XCM, we don't really make any money, but XCM would go higher. And that obviously happens with more usage. Whereas on the other side, if everyone was buying Bitcoin, we're getting a small amount of XCM that's actually being burned, being vaulted, et cetera, which may not have a huge effect on the XCM price, but it would have a massive effect for those dividends or revenue share payments to the growth token holders. When Austin odd, right? We're waiting. So we've been approved, onboarded by the service. They're now coding the accounts or mapping the accounts to their own system from the banks that open those accounts. That was supposed to take 2 days, but they haven't. I think they're waiting on their dev team. We're like waiting in line. So we don't have a specific time. It could be any day now that they get ready, and then from there to implementation, it would be a few days. Yes, CM bond will be tradable on a secondary market as soon as it's issued. So after the 90-day period of primary, it will be issued and it will be immediately tradable on CoinMetro, a CoinMetro securities platform by CoinMetro DOO in Montenegro. So you will be able to trade it, sell out, buy into more, whatever. Daily interest will be credited to your Ignium account, but will be mirrored on CoinMetro, and you will be able to interact with it at CoinMetro. So if you have a CoinMetro debit card, for example, you could gain access to those funds. All right, guys, we went a little bit over, a couple minutes. So appreciate it, guys. Some good questions. Thanks for the questions, Michael, as well as everybody else, but good questions, Michael. Can the bond be sold cheaper than it was bought? It could, sure. It's an open market. Generally speaking, you probably wouldn't have massive liquidity in the beginning, so you may see prices like this. But I'd venture a guess that the mean price of the bond, considering the interest, it's an interest-bearing asset. So there's always going to be someone that has interest to buy it. So over time, I do think the mean price will generally be the issuance price. Normally in traditional markets, when bond prices go higher, interest rates fall and vice versa. I don't know if we're going to see that immediately in a more illiquid market, but it will be a fluctuating price. Look, there's no sense to have a market that someone could sell out of an asset if they have to and not have a fluctuating price, because if no one's sitting at the right price in the book, they can't get out. And sometimes you have to get out. So it has to have fluctuating price. Thank you, guys. See you guys next week. Appreciate all the questions. They were all great. Yeah, have a great Friday. Spend some time with friends and family. Hopefully you don't need to Zoom everybody anymore. Now you can actually go see them in person, or just walk out on the street and say hello to a stranger. And, make sure when you say hello to that stranger, just scream XCM in their right earlobe as you walk by. They might not know what it is at the time, but you scream loud enough so it stays there, and then they'll figure it out. All right, guys. Like I said, have a great weekend. Thanks for being here. Tag me on Twitter @KevinMurcko. Tag me on Telegram @KevinMurcko. Any questions you have, I'll answer them. Make sure you subscribe to this fabulous channel, and click the little thumbs up button for us on this video, and just go wild. Click them all. And see you guys next time. Cheers.